Hi everybody, hope you're doing well. It's Nick here, Managing Director at Verta Property Group, and today we're bringing to you a Leeds development right in the middle of Leeds city centre. It's very, very rare that we get projects in Leeds. The supply is very limited. So to bring Aire Gardens to the market was a real privilege for us, and really happy with the structure of this development and the investment case for our purchasers. So we're going to go through it today in a bit more detail, give you an understanding of the project itself, the developer, where it sits within Leeds, and the Leeds market as a whole. So let's get started. So it's a 98 bedroom development, or 98 apartment development containing one bedroom apartments. It sits just south of Leeds city centre in a regeneration area, which is called the South Bank Regeneration Area. So if you Google that, it's had a lot of coverage recently from the likes of BBC, etc. And this development sits just below it. Now, it's actually a commercial to residential conversion. So it was Grade A office space owned by a Canadian pension fund, which has been sold to the developer, and they're turning it into luxury apartments. And when I say luxury, I do mean high specification. So here's a quick run through of the key points to consider. Prices from £197,000. So we have rental yields up to 10% net. That's via the short-term let approval. As I said, one bedrooms, sizes up to just under 800 square meters, prime city centre location. You're literally 500 meters from the main train station in Leeds. Only a 20% deposit required during construction, of which 10% is protected through the new build warranty. 999-year lease and a share of freehold. Completion is set for Q2 2028. You've got your usual 10-year structural warranty and a service charge, £3.51 per square foot, which is actually very attractive in relation to the facilities that are on site. So this gives you an idea of where the development sits if you look at the top left here. So you've got this pink arrow highlighting where the scheme is. This area just above it is what we call the South Bank regeneration area. Then as you see, you can stroll over the river and you're up to the station. It looks a bit bigger on this map, but this displays it a bit better. Here's the development, here's the station. You literally just stroll over there and you are in the centre of Leeds. It's a very, very strong location indeed. For those of you that don't know Leeds, you're literally 2 hours from London, under an hour from Manchester, a couple of hours from Birmingham. But yeah, it's a very, very large commercial hub these days. They've got a lot of major employers there, which I'll go through later. There's a huge student population, 70 odd thousand. They've got a phenomenal graduate retention rate as well. So when you combine those factors, the undersupply of developments coming to market, the forecast for the region or for the city is expected to be, or is very, very strong. Cool. So this is the development here. So as we say, it's just one bedroom apartments that are available, 98. And it's quite a unique building in itself. You've got this massive glass facade and centerpiece of the development, which you'll see soon. And this is one of the commercial buildings. And then you've got one here and one just here as well. And as I said earlier, you stroll over here and then you're into the city centre. You've got the station around here. And there you go. Cool. So in terms of the market information, here's a few key points to consider. So firstly, the regeneration. When we're assessing developments, having a big regeneration area nearby is a huge, huge plus side to the investment. So for those of you that kind of stating the obvious, but for those of you that don't know, regeneration is effectively an area that's been identified by the local authority to receive significant amounts of investment, either public or private investment. And normally it's a combination of both. And they highlight this specific area of land, and within that they put in leisure facilities, offices, a certain number of new homes, often parks, obviously commercial, etc., etc. So they basically plow a load of money into these areas of regeneration and then bring them to life, and as a result of that, it affects the property values in that particular zone and the immediate vicinity. So this is quite a large scale one. So you've got £1.4 billion of investment going in there. And as I say, homes, jobs, commercial space, lifestyle amenities, all very, very important. A couple of examples of that is one we've written here is Ancoats in Manchester. So that's seen just over 35% capital appreciation following the few years that was built. Other major ones are ones like Salford Quays, where you had Media City there get developed, and you had big corporate employers like BBC, ITV, Under Armour, Kellogg's all going to there. Probably the most famous one in the UK is Canary Wharf. Years and years ago, obviously that didn't or wasn't the financial hub that it is today. And you can see the effect on property values there. So it does happen all across the UK. Liverpool Waters is another one, Wirral Waters. And yeah, there's plenty more, but there's a huge amount of evidence to show you that what happens to property values when that takes place. And can't stress enough, this development sits right on the south line effectively of or border, should I say, of the regeneration zone. So yeah, really, really strong there. So moving on to other general benefits of the Leeds marketplace. So the Savills residential market forecast report 28.2% projected in average values for the Northwest region by 2029. Regional growth forecast, so this is from JLL, they're looking at a 4.4% annual growth rate, so about 17% from 25 to 29, which is always good to see. You've got the fundamentals. We've labelled it as intersection of strengths there, but really I'd label it as this development has a lot of investment fundamentals, location, price range, deposit structure, major employers nearby, phenomenal transport links, big student university area, major lack of supply of new housing, and yeah, all those things combined together to what really makes the investment case. Tenant base, as I mentioned there, 70,000 students there, strong graduate retention. In other words, people are going to university. It's a massive uni city, Leeds, but then they're staying on after. So yeah, that professional talent bank is quite decent for employers. And then supply and demand imbalance. So I believe this is from JLL as well. So 70,000 new homes are needed in Leeds by 2042. And obviously they're not building anywhere near that amount. So, yeah, a few market statistics for you. Touched on the South Bank generation here. And again, just touching on the map on the right-hand side, you can see the exact build of the development. And then you can see the South Bank regeneration area, which has been identified there, and how close this development is. So you're crossing the road and you're going to be in there with, leisure, retail, commercial spaces, huge amount of jobs, so 35,000 jobs. And then there's going to be a lot of parks and general outside space as well. So certainly a lot happening, and that's going to push up the values in the area. Cool. Major corporate employers. This is probably one of the biggest factors for me, because when you're assessing a development, right, in the UK, you're fortunate because if you invest in most city centres, you're going to have demand from tenants. But what is the quality of that demand? Where are the tenants executives, professionals? Are they reliable? Can they easily afford the rent? And by going into an area where there's huge major employers, it just gives you a strong tenant base where there's going to be consistent and stable demand. So yes, you might get that demand in other areas, but having the big employers there certainly helps. So Leeds is the largest financial and economic hub outside of London. Okay, and that's reported by the Sunday Times. And in other words, they mean that there's loads of legal and finance firms based in and around Leeds. So you've got the big four on the accounting side, so PwC, KPMG, EY, Deloitte. You've got NHS Digital, HMRC, ASDA, Jet2, etc., etc. So there's loads of employers. I believe on the next slide we've got all the logos as well. So yeah, huge tenant base there, which is really, really important. Market performance. This is more development specific now. So if you look at the projected rentals for the one bedroom apartments, you're looking at about up to £16,200 per year. So 975 to 1350 per month, depending on the unit, the size, the finish. Obviously affects things. So that's what you're looking at for a traditional tenancy agreement. And this development is short-term let approved, what I touched on earlier. Well, I should say it's not the whole development that's short-term let approved. There's basically authority for 1 floor and a half to have to operate the short-term let model, because you don't want every single property in the building doing short-term lets. So yeah, there are a restricted number of units that can do short-term lets, but if you can do that, you're going to net just shy of £2,500 per month gross. We've had multiple short-term let experts look at the project and assess it. As a result of that, the net yields you're looking at for the short-term let market is going to be in a region of 8 to 10% after your costs. So yeah, really strong cash flowing asset. Cool. Touched on this already. On the long let side, you're looking at 7.6 or up to 7.6% gross yields. Gross yields on short lets will be about 12, 14. So nets, yeah, you're looking around 6 to 10, depending on the letting model that you choose to operate. And yeah, we've kind of gone through the forecast there, but both rentals and value rises are forecast by leading experts for Leeds and the region. That's just another shot of the development there. That's the building. Cool. Yeah, don't go through all of this. I'll show you how unique the building is in a second. But it's got, as I touched on earlier, it's got this atrium in the centre of it with a retractable roof. And when you walk in, there's like a huge amount of light. It's beaming through. So that creates a really, one, unique and two, welcoming, positive atmosphere for tenants, which people do care about. Like, they don't want a dingy, hardly lit, old 1990s office blocks. They want new, modern, high specification, unique, Instagrammable, and just, yeah, contemporary, really. So we'll go through the exact specifications and the on-site amenities in a minute. But yeah, that's the kind of key things you need to think about, and that delivery date as well. So the development group are called Setcon, but this is being done by their luxury arm of the group, which is called Hilton Development. So they've done over 48 projects, significant level of GDV, nearly 1,400 units. So yeah, they're very well established. They've got a great track record. As I said before, they're only asking for 20% during the construction process, and 10% of that is protected through the new build warranty. So that's a very, very rare thing that you see these days. Most developments outside of London, during the off-plan process, if you're putting in 10, 20, 30%, typically none of that deposit will actually be protected by the structural warranty, where in this case 10% of it is. So that's really important. Kind of touched on this already, but you can expect the internals to have just as high specification as the communal areas as well, but we'll provide you the full spec list so you can have a good look through. Just a couple of shots of Leeds there. Not too much to talk about here, but you can see the range of apartments. Okay, resident experience. This is a big one. So we'll skip on to the next line. So next slide, sorry. So in terms of the tenant base nowadays, the demand from tenants is increasing, right? You're seeing a lot of co-living style developments. A lot of more people are renting than buying, just due to affordability reasons in general. And in Leeds in particular, I touched on this earlier, but with regards to the graduate retention rate, a lot of the students are coming from perhaps more social, community-based accommodation. So they value the communal areas to a great extent. Whereas, if you've got a couple that are in their, late 30s, they might not be in the social areas as much. Whereas you've got young people coming out of university and young professionals in general, that's what they want to see. Developers have to go above and beyond now to match the one, the competition in the marketplace from other developers, but two, the demands for tenants. Now, this development's got a residence gym. It's got games and social spaces, lounge and co-working areas. Co-working is becoming such a big thing now. It's just almost essential. People are being way more entrepreneurial. They've obviously got the ability to work from home, whether that's on a full-time basis or a hybrid model where they're going into the office. But people don't want to be stuck in their one-bedroom apartment all day and all night. So being able to get out of the apartment, go work downstairs in your new modern building with a nice welcoming atmosphere, go out for a bit of lunch, come back, finish off your work, go to the gym, and then go back into your apartment. It's almost creating a development where you barely have to leave. So having that convenience, that those facilities on demand are what's going to, for you as an investor, enable you to charge a high rent and also minimize those void periods, which are very, very important. And you'll also have one thing, not to go on a huge side tangent, but with regards to the regulation changes this year, tenants don't have to give the notice that they used to, so they can leave with, effectively a month's notice or 2 months' notice, I believe it is. And they're on rolling monthly contracts now rather than the traditional 12-month tenancy. I believe they call them periodic agreements now. periodic tenancy agreements. So unless your development is living up to expectations, then your tenant is going to leave, and then you need to get someone else in, which is a headache. So buying a development which has a decent spec is super important. So we'll continue now. Private dining space, concierge service. You've got that central atrium with the retractable roof. And then we were kind of touching this already, but communal areas as well as the private dining space. And yeah, kind of touched on those points already. Now, this is just some drone footage of the development. We do have some more detailed videos showing the internals and that atrium we were discussing. But as you can see, it's nice green surrounding areas, bit of grass nearby. You've got nice built-up areas near in the immediate vicinity. A quick stroll over here, then you're into the station, and then in the city centre. Obviously, there is public transport links as well. But yeah, this is the project here. Units available on all corners, all different types of views, different levels. As I say, there's only a limited number of short-term let units, so keep that in mind. Cool. So just to recap then, here are a couple of the key points that I consider most important. So firstly, cash flowing, rental yields. Most of our investors are mortgage buyers, so they need to be certain that there's a good margin in it after they've made their mortgage repayments, and they can cash flow some monthly income. And as a result of that, you need to charge a decent rent and be able to generate that profit each month. So strong rental returns is a big one. We've got the yield profile themselves. So looking at that short-term let model in particular, up to 10% net. You're next to a major regeneration area. And don't take my word for it, guys. Google, do some search online, go through AI and ask, what effect can regeneration have on property values? And also look at this specific regeneration zone, South Bank, Leeds, and you will see the effect and the data. So comparable growth evidence, kind of touched on this already, Ancoats, Liverpool Waters, Canary Wharf, these are all major regen areas and projects. Great market outlook, that's both for rental price rises and for capital appreciation. Good tenant demand, again, because of that huge employer base, but also because of that large student base that are staying on after their education, and they want that good quality accommodation in the city centre, not having to, go 20, 30 minutes out of town. Supply demand imbalance, again, that's just a fundamental of a lot of the cities in the UK. There is an undersupply. They're not building properties quicker enough, due to planning regs, difficulty to acquire land, cost of materials, just general regulation. It's not easy to develop in the UK. So yeah, if you can get a good piece of land, build that out and rent that on the open market, and you can be involved in that as a property investor, then it's you're going to have demand for that asset. Cool. High spec designer lifestyle. Again, just differentiating yourself. Yes, Leeds does have a shortfall of accommodation, but there are other opportunities out there. So getting something with a 5-star standard, almost hotel co-living level amenities is super important. And yeah, just this last one, we can obviously help with the full process with tax advice, legals, property management, furniture, anything you need. Cool. So in terms of the reservation and purchase process, firstly, have a look through our due diligence pack. We go through great efforts to make sure we provide a huge or a large due diligence pack where you're going to have the floor plans, price lists, fact sheet, location guide and market information, images, videos, service charge details, and yeah, obviously the brochure itself. So have a good look through that. Make sure you're familiar with everything. Speak to your consultant or speak to myself about choosing a unit which suits you. Do you want a short-term let approved one, or are you focused on getting one, perhaps with the best view on the highest floor? There are a couple of things to think about that. But once you've chosen your unit, you'd pay your £3,000 reservation fee. We would instruct the solicitors. You'd go through the purchase process, which takes about 28 days to exchange contracts. You'll then pay your deposit to the solicitor of 20%. You are the legal owner when you exchange contracts at that stage. You don't have to pay anything else until completion in Q2 28. And remember, guys, people say, I want my money working for me now. Your money is working for you because you're putting in a 20% deposit, but you're getting the capital appreciation on the full value through the construction period. So just very briefly, let's say the development increases in value by 20% over 2 years, right? Which is entirely reasonable if you look at the market data of growth and if you consider that you're buying off plan. So if you buy for £200,000, you're putting in your deposit of £20,000. Okay. £40,000. So if you look at the growth rate of 20%, so on a £200,000 purchase, again, that's going to be £40,000. So you've put in £40,000, you've not put in anything else until completion, but you've made £40,000 because the overall property value of £200,000 has increased by 20% during the construction period. So you've put in 40,000 and you've got out 40,000 in equity before completion or at completion, based on conservative projections. So you're making 100% return on your cash invested without doing anything. Okay, so that's what you're going to. That shows you the power of off-plan purchasing. And when people say, "Oh, I want immediate income," it's very short-term thinking, because you pay a hyper premium to have something ready that's good to go. And what you could do with this model is put in 40,000 here, go into another unit as well if you've got the budget, obviously, rather than putting it all straight into one project. So yeah, keep that in mind. And obviously, the other thing as well is, don't forget, all good developments in the UK, they sell out during the construction period. It's very rare you get to completion and a high spec city centre development that's well priced and well structured is still available in the market. It just doesn't happen. The demand for assets is so strong in the UK, even in the softer markets, timeframes. So keep that in mind, guys. 20% in, but you're likely going to make 15, 20% in uplift during that construction time frame. As a result of that, your return on cash invested figure is very strong, and then you can start to cash flow on completion. Cool. I'll leave that there. But as I touched on, we can help with furniture packs, short-term let management, long-term let management, company setup. We offer free company setup to our investors. Use an ACCA qualified accountant. Got mortgage brokers that can get you preferential rates. So yeah, speak to us. We're here to help. And I've kind of touched on it there, but yeah, we're very experienced. We've done a lot in our time, so I won't go into too much detail there. But a few reviews of us, and I'll wrap it up there, guys. So don't forget, we don't charge any fees at all, so that helps. Any questions, let us know. You can reach out to us. You can message me directly, nick.highland@vertapropertygroup.co.uk. You can have a browse through our website, vertapropertygroup.co.uk. However, there are lots of properties that are not listed on our website for a number of reasons, really. The developer wants to sell them off market. They're about to launch and we haven't done the marketing yet. Sometimes there's developers don't like them listed online due to protecting the mortgage valuations and bits and bobs like that. So let us know what you're looking for. But hopefully this Aire Gardens development in Leeds is one for you to consider. Check out our social medias channels there, guys. And I hope to speak to you soon. My name's Nick from Verta Property Group.